to the comments that David Einhorn has made about how market structure with stocks, he basically called them broken and things have changed a lot in the last 15 or 20 years with passive investing or index funds. Do you think that the stock market, there's a permanent bid under it now because of people who in their retirement accounts are basically just dollar cost averaging with their savings if they have like a corporate job that's high paying with these index funds?
Well, we've had a big transition from defined benefit plans to defined contribution plans in terms of structural retirement savings. And it's not clear to me that there's a huge difference in terms of sort of the persistent bid that exists in the defined contribution plan system relative to what existed previously. Pension funds bought stocks and bonds, for decades, just as people are buying them in their 401k. And so, is it possible that is creating is that creating a bid under the market? Yeah, to some extent it is, but I certainly, the statement that the markets are broken doesn't align with certainly what I see when it comes to seeing that markets are largely trading in line with the type of macroeconomic dynamics that have existed for multiple decades. It doesn't mean that they're right or they're, the consensus expectation is, where I think markets will go, or that there's no alpha. It just means that the basic day-to-day market behavior still looks pretty normal to me.
You don't think it's weird though that a lot of these index funds, they end up owning over 40% of the shares outstanding. And so they're not like being activist investors getting board seats or actively trying to manage the operational controls of the company, profit margins, things like that. They just passively own a lot of shares. And then they're controlling over 40%, 50% of the shares of these stocks. The other issue I have with the index funds is the market cap weighting. It just seems that money indiscriminately goes into the companies that are already big. It's not reallocating capital like an active money manager like you or others, where they would try to buy low and sell high. It just keeps going into the larger and larger market caps.
Yeah, but people have always invested in index products in one form or another. I mean, in index futures or the equivalent. When it comes to oversight, I mean, my view has always been that behavior by boards and shareholders and things like that is not a meaningful influence on corporate outcomes. I mean, part of that is being a macro investor, and so seeing the world through that macro lens and seeing that the much bigger driver, certainly as you start to think about stock indices, stocks in index form, maybe any individual stock could be on the margin, but at an index level, macroeconomic drivers matter a whole heck of a lot more than any individual decisions that are being made by companies themselves or their boards or oversight related to it.